I bet you thought I was going to make a clickbait title and then not deliver the message. Well, it's not supposed to be this way. What if I told you that there is a strategy where you need to invest no more than 5 minutes per month and you will still be able to make that huge portfolio? Investing knowledge required? Zero. Fundamental analysis required? Zero. Chances that I will sell you a course about Bitcoin options trading in the end? Zero. What's up? What's up, investors? My name is Artem Dikarev and today I will tell you how you can invest for 5 minutes per month and still win big. I will show you a very simple strategy which answers just 3 questions. Where to invest, how much to invest, and even when to invest. Unbelievable. Watch this video all the way until the end because this strategy consists of several mini steps and it will only work if you follow each and every single one of them. Don't skip. Alright, without further ado, let's begin. But first, let me know in the comments how does regular investing look like for you. Because for me, it looks like this. An investor selects dozens of companies, analyzes each and every single one of them, selects the best and most promising company in each industry, and then invests proportionally in them, so that each company will have an equal weight in his portfolio in order to mitigate risks. From time to time, you will need to check on your companies to see whether fundamentals have changed, as well as monthly portfolio rebalancing to stay on top of your investing game.
Yeah. This big brain.
And this is a pretty classic investing strategy. But what if you have no idea how to do an analysis, how to build a portfolio, how to properly diversify, and how to maintain the same proportions? And this is where index investing comes in handy, known as investing in ETFs. So the answer to the part of this strategy to the question of where to invest would be invest in ETFs. And what's even an ETF? Basically, this is a pre-assembled portfolio of shares. Each ETF has hundreds of companies. And so by just investing in one place, you solve the problems of diversification, analysis, portfolio building, and portfolio maintenance. ETFs can even copy major indices such as S&P 500, Dow Jones Industrial Average, Russell 2000, and Nasdaq. ETFs can also be industry related, such as utilities sector ETF. And ETFs can even track regions and countries for even bigger diversification. For example, there are ETFs that consist of companies from only developing countries. Stonks. And one of the most popular ETFs is Vanguard 500 Index Fund ETF. This is its full name, and if you wish to invest in it, just type VOO in your online broker app, such as Wealthsimple or Robinhood. This ETF completely copies S&P 500, and if you invest in it, your portfolio will go up and down the same way as S&P 500. And speaking about Wealthsimple, if you are from Canada, USA or UK, you can open your very own investment account using my link in the description. And for doing so, you will receive $10, literally free money. Or you can even invest in every single company on the US market. For this, you will need to purchase Vanguard Total Stock Market Index Fund, which has a ticker symbol of VTI. And this means that you will be literally investing in the whole US economy. And like Warren Buffett said, never bet against America. And the question might arise, why would you struggle and build your own portfolio when you can just simply invest in an ETF? And the answer would be rather simple. Even though ETFs solve most of your problems, you cannot select companies you are investing in, such as Tesla. Some ETFs are considered to be low-risk investments, but the return is also limited. And by assembling your very own portfolio of individual stocks, you can potentially achieve higher returns. And it is also just way more fun in general. And just one quick note before we proceed. No one has ever been able to beat the market consistently. You might succeed in it for 1, 3, 5, 10 or even 69 years, but the longer you are competing against the market, the least chances of winning you have. Just know the rules, play by the rules, and you will win in this game. Now let's talk about one of the biggest questions any investor might have, and it is when to invest. Is it the right time to invest now? Is it good time to invest now? But before we proceed, please consider liking this video, subscribing to my channel if you find my content interesting, educational and entertaining. As a beginner creator, your support helps a lot and your feedback is extremely precious. So if you have any recommendations or suggestions, feel free to leave a comment and I will personally reply to you. And remember, in Russia you don't slam that like button, it slams you. Alright, now let's talk about the next part of this strategy, which is when to invest. And this is one of the easiest concepts of investing I ever heard about. It is called dollar cost averaging, or DCA, and it basically means that you need to invest the same amount of money at the same time of the month. Mind-blowing. Here is my very own example. At the end of the first week of the month, I invest $1,200. This means that every 6th of October, 6th of November, 6th of December and so on, I buy stocks for the total amount of $1,200. And I absolutely don't care if the markets are at all-time highs or at all-time lows. I don't even think about trying to time the market because it is impossible. I mean, you can try and time the market, but if you succeed, it will be just a lucky guess. And I'm pretty sure that 99% of investors will never be able to perfectly time market 10 times in a row. Just think about this. If there is at least one person on earth who can tell for sure when to buy and when to sell, what stops this person from becoming world's first trillionaire? He or she will always buy low and sell high. And I don't see any trillionaires around, do you? That's the thing. Don't fall into temptation of trying to time the market and just invest using dollar cost averaging method. And you will be considered a smart investor. Trust me. And what's the beauty of dollar cost averaging? First of all, you're constantly investing. You are investing no matter the market conditions. Because you never know if these months will be the months when some stocks will experience double or even triple digit returns. Second, you're always investing the same amount. And if the markets are high at this very moment, you will just buy fewer shares. But if the markets have previously collapsed, you will buy many more shares with good discount using the same amount of money. And third, dollar cost averaging teaches you to be a responsible investor, because you know that you have to invest at a certain point in time. So you prepare for this, you save money, you set them aside, because you know that you will need to invest them. Dollar cost averaging teaches you how to be responsible with your very own money. Approved strategy. And now let's talk about how much to invest. And then I will show you an example of how much and how long you need to invest in order to create your very own $1 million portfolio. And the answer to how much should I invest is individual to every single one of you. Some people suggest investing somewhere around 20% of your monthly income. But in my opinion, that's very generalized. You cannot possibly know the situation of every single person to suggest them investing 20% of their income, right? Some people live from paycheck to paycheck, and for them investing 20% is literally impossible. Others might have 6 or even 7-figure salaries, and they might invest even more than 20% of their income. And while 20% is a very nice benchmark, it is still very generalized. Instead, take a look at your incomes and expenses. I even recommend you to create your very own budget. And don't worry, it's very easy and fun, I guess. So first, create a table with 3 sections, one on the left and 2 on the right. Your left section is your income, and the section on your right are your expenses. And you can even go ahead and divide your expenses section into essential expenses and non-essential expenses. Every single time you make $1, whether it's your salary, side hustle, or even a gift, put this amount under your income section. And every single time you spend money, put this amount under essential expenses or non-essential expenses section. Essential expenses here would be payments that you cannot avoid, such as rent payments, insurance, utilities, groceries, and so on. And non-essential expenses would be expenses that potentially can be avoided, such as eating out, Netflix or Spotify subscription, shopping on Amazon, and so on. Track every single dollar that goes in and every single dollar that goes out. And at the end of each month, subtract essential and non-essential expenses from your total income. And whatever money is left, these are your savings. And based on this amount, which is hopefully positive, you can determine for yourself how much you can contribute towards investing. And I will be making the whole series called Investing for Beginners in the nearest future, where I will be talking about budgeting, debt management, and preparing yourself for investments.
Subscribe so you won't miss it.
And now let's take a look at the example of how much and how long you need to invest in order to achieve that $1 million. Let's imagine a 25-year-old guy who just started investing. He deposited $750 into his account and invested it into into S&P 500 ETF by Vanguard called VOO that we were talking about before. And this will approximately give him 10% annual average returns. This is where to invest part of the strategy. After budgeting his incomes and expenses, he realized that he can contribute up to $500 per month. And this is his how much to invest part of the strategy. And every single month at the very same day, he invests this $500 into S&P 500 ETF. And this is his when to invest part of the strategy. And in 30 years, his portfolio will reach approximately $1 million. Unbelievable. And that is not including dividends being reinvested. Reinvest dividends, trust me. As a result, we have a 55-year-old with $1 million portfolio. Was there any fundamental analysis involved? No. Was there any binary options trading involved? Absolutely no. And how long he spent investing? Approximately 2 to 5 minutes every single month. Should you copy his strategy? Do it now. Let me know in the comments if you prefer investing in ETFs or if you like selecting your individual companies and building your own portfolio. And if you want to learn more about budgeting, debt management and investments, please consider checking my Patreon. The link is in the description. And that's all there is to it. Thank you all so much for watching, and let's make $1 million or $2
Together.